GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to this weekly webinar. Great to have you here. This is in fact our final weekly webinar of 2020, so no weekly webinar between Christmas and New Year's, and so then the next one after today's will be on January the 5th, Tuesday January the 5th, and by which case we'll be into our 2021 trading, which is amazing to think. Now there are some interesting moves going on in markets at the moment, particularly with regards to the dollar, and a little bit of a pullback in stock markets that's noteworthy. So also a big breakout, then pullback in oil. So we'll cover all of that. And as per normal, we're looking at forex markets, we're looking at some commodities, indices, and a little bit of crypto too. And if there are some extra markets you'd like us to cover in these charts, sometimes we'll pull out a special chart, something out of the unusual, out of the ordinary, that's interesting to watch. And so we'll give us a hint and tell us what you're interested in, and we'll obviously do it in the webinars. Otherwise, please click that like button. It really does help us spread the word about these videos. So let's get started with euro dollar. So pretty textbook. So what's obviously happened here is we've broken up through the range resistance, broke up through, pull right back to this trend line, which this, if you'd bought on this breakout, this pullback would have caught you out. I mean, this is just something that happens in forex sometimes. I believe that was the ECB meeting, if that serves me correctly. But depending on your stop loss placement, obviously, had you been long this market with stop losses under the lows here, then you would still be in the trade, and you'd have ridden out this ride up here. And obviously, just markets do not go up in a straight line. We came up, we didn't quite make it to 123, got at 122.70, and we've pulled right back down here, and we're getting a rally off this trend line, which looks a little bit haphazard on this 4-hour chart, but actually if I zoom out a bit, it's the same exact trend line that we had in last week, which starts at the low here and then kind of considers this a bit of a kind of false breakdown here, goes through these lows, and then clips onto that whatever, that basically caught the low last time, and it's caught the low again this time. So this trend line is what's holding up the price action on the 4-hour chart. But interestingly, this kind of shorter term trend line on RSI has broken down. So we've got to watch out for that. That could be an early warning sign to us that actually we put a little top in on euro dollar, and maybe we're heading in for a little period of dollar strength. You'll see in a minute that I've got a similar kind of concept to with the S&P 500. Now we have to be very wary here because I'm kind of in top picking territory here. I don't ever want to be trying to pick the top, but what I am thinking here is that we've got a warning sign, a breakdown of this RSI rising trend line ahead of the breakdown of the price trend line. Now you could probably draw a similar trend line in terms of price to here, and you could say that we've pretty much held it. We had a little false breakdown, but we're bouncing. So what we've got to look out for here is this is a decent textbook opportunity off the lows here. Now we've obviously already had a bit of a bounce, but what we want to look for is basically when the price gets back up to here. The way I would interpret this is just to be a little bit more cautious on these longs, and somewhere in this consolidation zone, once the price nears into here, which it almost has in terms of the highs of today, once we start testing these previous highs, you can even be more conservative about it, put it into maybe even these top 2 candlesticks where we tested in here. If we can get into this territory again, start looking out for some rejection, and we could be testing the underside of this rising trend line on RSI, and it could be a retest of the rising trend line and a drop, a retest of the highs and a drop. So let's see if that materializes. For now, very much a textbook decent uptrend with a rebound, with resistance broken, rallied up, and retesting the old resistance as support. So that's what we like to see. And we've moved up through 122. A close for the day above 122 would be a good sign, an indication that maybe we're ready to move up to 123 We've just got that, just checking out for any price action signals up here near the highs, which could maybe confirm a breakdown from this rising trend line. Bigger picture, of course, is that we still are overall positive on the euro. We've broken through this long-term declining trend line on the monthly chart, and we're trending up. And we do think that ultimately we're going to see a retest of 125, but markets don't have to obviously go up in a straight line. And you can see that we've had a really decent rally in the euro, and so maybe before we make a test of 125, maybe we need a steeper pullback, maybe back to 120 again. Let's see. So over to the British pound. This is our weekly chart, which defines neatly our 134, 135 key resistance area. Now, as we drop down to the daily chart, you can see we made our best progress yet. Touched the 136 level, so we sort of thought 135, okay, we've got the close above it, closed above again, tagged 136, and the confidence came out of the market. And as you can see, this is exactly the same colored area that I had in last week's webinar. You can see that pretty much almost perfectly defines the gap, the weekend gap, where we believe this was late Friday, and as we opened on Sunday night, or early Monday, depending where you are in the world, we've gapped down, and we're treading lower. And as you can imagine, a lot of this is Brexit uncertainty, because there's still not a deal for Brexit between the UK and the EU, and we're, well, as you know, a couple of weeks, less than a couple of weeks away from the end of the year when something needs to be signed. So where do we find ourselves? Well, it's no surprise that we're kind of uncertainly chopping, like, it's basically, oh, okay, we feel good about Brexit, it's still not signed yet, but we're chopping around in this 135 vicinity. Bit like the euro, if we broke down through this rising trend line here, this one's more of a longer term one on a weekly, and then we've got a daily equivalent down here. If we drop through 131 and we started trending lower down here, I mean, I think that would be a bit of a turn of events. But for me, if we get down towards 131 again, that's an opportunity. If you go with the assumption that a last minute trade deal is going to get scraped through, that's a dip that you could think about buying into in accordance with this longer term picture. If you think we're setting up for moves beyond 135 and this resistance is going to break, then obviously you just want to, you want lower price opportunities to take advantage of that break. And so you didn't want to be buying at 136, obviously, with the benefit of hindsight, but dropping down towards 132 and change, potentially down to 131, that's a lot more attractive if ultimately we think the direction is north here. Of course it may not be. If we have a no deal Brexit, then I think we can probably turn a bit bearish on the pound, and a break of this rising trend line, and then I think we start targeting the old lows. So we start down at 127. Why can't I tag this? Oh, there we go. 130, 127, which is these lows here, is probably target number one after breaking this trend line, and then we start targeting down at 121, which is these lows down here. So from 131 to 121, we literally could be looking at a 1,000 pip move if there's no deal Brexit, because even though this is something really the market should have been prepared for a long time, you can see the fact that we're nudging into the highs. There is an assumption that a trade deal gets done. So if it doesn't, I think we can just unwind a lot of these recent gains and just basically trade within the same range that we were, 130, up at mid 130s to lower 120s. Okay, moving on to dollar yen. So we did actually have a little tag of 103, which is interesting. And even though I know I've had this declining trend line on forever now, and I thought just to mix it up, I would draw in this perfectly parallel. So you can see if I move it around, it perfectly lies on top of this one. And if you draw it through that top low, it pretty much sits on top of this low here. And so what you can see at the moment is that we've tagged 103, If we're maintaining within this declining trend, then we'd expect a move lower down towards probably 102 to hit the lower trend line. But if we start moving back up again and tag this upper trend line without having hit the bottom one, it's a bit of an indication that maybe we're setting up for a break above the declining trend line. But for now, still in this very steady downtrend for the dollar. So so for now we're still looking for sell opportunities. We're touching the old lows here. Potentially this is where we can roll over to touch the declining trend line. If not, if we take out these lows here, these support, if it's no longer resistance, then we can expect to shift up to these highs through here. So depending on how we react around, what's this level, 103.70, could give us an opportunity to get up to 104.60, so a 90 pip move potentially on the offering, depending on how we trade around this level. Likewise, 103.70 down towards the trend line is 102.30. We've got a sort of 140 pip move potentially to the downside, depending on how we hold up at 103.70. So certainly look where we are now. This is a level to consider. It's a kind of high risk reward area, I would say. We might get some chop in this area. That's the risk. But if we get a decent price action signal at this level, not necessarily on the daily chart, but could be on the 1 hour or 4 hour chart, that could give us a decent idea what's going to happen next. Okay, moving swiftly on to Aussie dollar, and so this is something I'd signposted last week, where we basically got our previous trend. The slope of the trend line obviously it helps us pick out possible entry points, but it also tells us the momentum, the speed of the trend. And so we had this slower paced uptrend, but then once we broke through 174, this long time resistance area, then the pace of the trend really picked up. And so then we had a slower pace trend line, then we had the faster pace trend line. And so what's happened now is that we've broken down. You can see pretty neatly, hit these lows through here, gapped down to the trend line, and then just over the last 8 hours or so, we've been trending down, similar to the euro, the dollar gaining here. So by this logic, so we've got 75 as a big round number, and this previous low, so that's possible support coming in here. But what I imagine is we get a dip down to the previous trend line, and then from there maybe we turn a bit more sideways for a while. We've broken this faster uptrend, in my opinion, and we've had a change of trend back towards the slower paced uptrend, and more likely a sideways period in which we probably don't take out 176 for a while. Okay, moving on to gold. So gold had a good week last week. And so I've drawn these couple of trend lines in, which again are parallel trend lines, and so sort of interesting the way the price action moves sometimes. So this one is obviously through these highs, with the exception of this kind of rather unusual attempt to break out an immediate failure through these old highs here, where we had that huge drop in gold. It steadied afterwards, but eventually did drop down for a 50% pullback of the rally here. And we said, okay, that could be the bottom, because it is in matching with the 50-week moving average, or we could get another pullback down to the 61.8. And so right now we've had a decent rally in gold in the last few weeks, and we've broken back above the old support area. So tested, broken support, tested as resistance, dipped, and then back up through. So now obviously that area wants to be support on any pullbacks to sustain the upward momentum. The only thing to suggest maybe it won't be is that we've got these two trend lines in place, and what I was going to demonstrate before is that yeah, again, these are pretty much parallel. So it potentially, this is not a confirmed trend line. this was what would confirm it, but obviously the fact that it's parallel does give it a bit of extra strength, and it's at the 1900 level, so a confluence of reasons to think maybe we get another sell-off in gold, potentially down past through this support and resistance zone and down to the lows again. So it seems like decent odds that we'll get a sell-off from around 1900, and then we'll need to probe. If it's a very strong market, we can just hold on to this previous high here. So that's already kind of happened. We did that once. We've had a kind of false break for the time being above 1900 after that move to the old high. So I suspect this line gives way and we move back down to test 1850 again, this zone. And if that gives way, then it probably tells us we need another test at the 50% level. So potentially a patch of weakness coming in here, and so again risking calling tops all round, but less so in gold, because actually the overall trend here is rather down as defined by these trend lines. So we're not quite out of the woods yet in terms of if we got to kind of break up through this declining trend line and we had to break through that high, then we'd start to be talking about kind of more of an uptrend. But really it's a consolidation downtrend for the moment, and we seem to have reached the kind of upper end of it. Now maybe if you're going to be more conservative, you could say there's a bit more upside to be had. Maybe we can push a little bit further through 1900. Maybe we even get into something like where this zone gave way. You could kind of take the high there and then kind of the low where it broke down, which is sort of these highs through here. It's similar sort of area. Maybe we can push up to there. So it starts at 1900, you've got the declining trend line, and then you've got this old high through here and these highs. So depending on how we could get a rapid move up and then a reversal back lower. I think if we close above this declining trend line, for me that's going to start looking pretty good and positive for gold. At the moment I'm assuming we don't get that and we roll over somewhere underneath this trend line. I actually had it more like through here to keep it parallel with this. Okay, so a slightly complicated picture with gold. How do I summarize it? Just to say that we've hit a potential resistance area, but there are some higher resistance areas within a kind of general downward consolidation, but shorter term obviously we're uptrending. So you need to be a little bit careful in these scenarios about just selling into an uptrend. What you kind of ideally want is some signal that the short-term trend is reversing in line with a longer term, in time with this longer term, in accordance with this longer term resistance, i.e. these trend lines. Okay, moving on to oil. We mentioned this in the daily note. Actually, this is the short-term time frame chart, but what we actually mentioned in the daily note was the big 50 level. We've not quite tagged it yet. We've hit 49, I believe. I don't know if we hit 50 in futures, but in spot oil, I'm pretty sure in futures too, we've topped out around 49. And you can see how 50 supported the price. It's obviously a round number for this extended period here. We had that big sell-off in 2018. We bounced back. We kind of consolidated for a while. And then obviously we had the big sell-off this year. We had a much stronger bounce as a smaller consolidation and a move up, but is this actually just going to turn into another kind of period of consolidation here between say 35 and 50? Are we just going to oscillate from here from now on? I think that's a distinct possibility given the uncertainty about the economic outlook. And you can see here that we'd hit this kind of period, this place of which has seen the price roll over the last few times, even stretch over to here. So this, where is that, 65 in RSI, 61 in RSI on weekly oil, has been resistance, and it's lining up with the 50 and the old lows. So a few reasons to think the oil could sell off, and actually we're starting to get that now. We had quite a big move overnight. For the time being we're above the price trend, but also it's another example where the RSI has already broken. So where was I talking about that before? I believe it was the euro. RSI has already broken, potentially an early warning signal that that oil is breaking down. So obviously oil's placed in dollars, euros are placed in dollars. There's a few indications here that maybe the dollar's poising for, I mean, it's been banging into 2.5-year lows in the dollar index for a while now. It keeps getting weaker and weaker. Last week was pretty weak. Maybe there's some signs that it is due a little bottoming process, at least, a little bit of a correction. And that would mean these big major currency pairs pulling back and the dollar strengthening. I think I was saying that last week too. You know, I've been cautioning all along that the trend is still higher and we need some confirmation, but I'm just saying this looks like it's starting to happen. Okay, let's move on to crypto. So not a lot to be said really with this chart because we just basically went vertical. You know, we broke 20,000 and we obviously just in the same sort of 36 hours pretty much we sprayed straight up to 23,000, 23,500, and we're sitting neatly around. There doesn't seem to be any big selling coming in. 2600, 23,600, I think it was 2800, 23,800 overnight. We've come off those highs slightly. I mean, this is obviously pretty top heavy, this market. It's got a lot of momentum, but it certainly wouldn't be my trading style to try and buy in at these levels. I think there's enough volatility in Bitcoin that you normally get these kinds of sell-off moments, and then it's a sort of bite your tongue and jump in if you think the price is ultimately heading higher, with the knowledge that it can obviously go a lot deeper when you're buying into these dips. But I wouldn't buy into these highs here. Obviously the trend is very strong. We're at record highs. But some sort of corrective move, I would have thought, of this weekly candlestick is due. And who knows, we've even put in the top, but there's, you know, it's pointless speculating on that at this point. But I just think that yeah, we've gone a little bit high and fast. Maybe there's one last leg up. I wouldn't necessarily advocate selling into this uptrend. For me, it's just a wait and see moment. And you can see on the shorter term chart, these are a couple of levels that are pretty obvious to everyone. At the moment, it looks like a false break, but it might not be. It might be a little break and then a pullback to the line and then another rally up. But you know, if we get a false break, we close lower for this period, then probably we come and test the lows, and then obviously a break below there, and then you can start looking for a bigger correction, and then the more decent buying opportunity presents itself. But for me, not necessarily at these levels. Last but not least, the S&P 500. So this is kind of interesting, right? Again, got my favorite trend line on there, which is I sort of vary it how it looks, but basically it's a sort of speed line through the highs, and it looks like we're breaking out above it, right? Last week I got my little cross in there. It's been there for a while, and then shorter term we've got a similar thing, a sort of speed line through the highs, where we had that sharp reversal, and these last two attempts have budged up against it. So here's what I'd say. If you are thinking about selling this market, just be aware that that's been a wrong move pretty much throughout the duration, really since March. Trying to pick the highs in the S&P 500 has been very fruitless. But always the counter narrative to that is, depending on how you go about it, particularly now, given that we are at significantly higher levels, there's lots of other measures to suggest the market's pretty stretched in terms of sentiment and things like that. It's a low risk to reward selling. That's the thing. It's counter trend, so obviously the trend can just keep moving higher. But we kind of know where our risk levels are, right? Basically, if we start breaking out to new highs again, then we're wrong. But if the market continues to turn lower, and maybe you get some kind of short-term confirmation, like a break through this rising trend line here, or some kind of topping pattern on a short-term chart, which I don't see yet. I mean, something of a, if you spread the chart out a bit, something of a double top here. But don't look for things that don't exist. We obviously had a rally up. We've had 3 failures through. Well, that's not really very well drawn up here, but we can see we're kind of struggling at this level. We're rolling over a bit. Some sort of confirmation that this bigger term idea that maybe we're just kind of grinding into this resistance and we can't quite make it through. And you can see on the RSI here, we've been grinding out new highs, but RSI momentum is very much slowed down. Now it could be setting up for a breakout and a big move to the top side, but again, in which case you'll know you're wrong if you are thinking about selling. And you can flip it around into if we get a big RSI break and a break above this rising trend line, I think that'd be one opportunity in which to trade a breakout trade. But otherwise, yes, just look at the opportunity on the chart in front of you. Even if we just pull down to the bottom of this channel, that would be a decent few hundred points in the S&P 500 in just what would be a consolidation, but still still very much an uptrend, but just after this big strong rally in November and a kind of slowing rally through December, it wouldn't be such an unusual thing to just kind of pull back and be in a channel. So that to me almost seems the more likely scenario at this point, but it's interesting to watch this rising trend line, big powerful break above it, or potentially it's just stopped us for a 4th time and we're about to roll over. Okay, I'm going to call it a day there. Thank you very much for watching this week, and as I said, no webinar next week, so have a very happy holidays, happy new year. See you in the new year. Thanks everyone.